Hey, what's up you guys, this is Irfan here from smartincubator.com and welcome to another video. In today's video, I'm gonna break down some trades for you on Euro USD and other pairs that I took a trade on. I think it was only Euro USD, so I want to break it down how I took this beautiful trade right here, plus the results of Gold Incubator, which is our trading robot that only trades gold. And as you can see, we are sitting at 84%. We were able to hit this, beat this drawdown that happened on June 13th, a few days ago. And look at this, from June 15th all the way to July 1st, which is almost 2 weeks, we've been able to gain over 30%, which is absolutely crazy because we've recently released a new preset file that helped us beat all the drawdown and have more control over the trading performance, which is absolutely crazy. And it's a real account, by the way. So let's get into Euro USD trade that I took yesterday. Today's Saturday, the market is closed. It's super easy, guys, if you understand the concepts of high probability supply and demand zones. If you don't know what they are, I highly recommend you to watch my other videos that you can find on my channel. I'm going to put a card above this video that takes you to the main video, the tutorial video about high probability supply and demand zones. So as you can see, guys, I'm going to go exactly at 8 in the morning. This is exactly when I wake up in the morning and analyze the market. So on 5-minute time frame, Euro USD, and also I kind of do top-down analysis sometimes from 15-minute time frame, 1 hour max, all the way to 5 minutes. So guys, the first thing that I noticed here was this liquidity grab that happened right here. So you can see this support level here, this support level, there's a bunch of liquidity sitting below this zone, and if you draw your support level, you'll be able to see that we actually have this shadow that got out of the zone. So actually it wicked out below the zone and got the grabbed the liquidity here. So in this case, what usually happens is that the trend of the market changes, because when the liquidity is grabbed, there's a high chance, there's a good chance that the price wants to go up a little bit, and then it does a little bit of correction, and then it goes up and creates higher highs and higher lows, and it goes all the way to this area to grab the next liquidity, which is still not taken, and it's our resistance level. Can you see this resistance level here? This is our support level, this is our resistance level, liquidity grab, boom. But what happened was this right here, it tricked a lot of buyers. So there's so many buyers who took their buy position here, put their stop loss here because they think they're smart and the liquidity is already grabbed. Now it's time to it's time to take advantage of this opportunity and jump into the buy trade before the market spikes. But what happened was this: it surprised them and it actually dropped really bad. So guys, what I want to show you, what I want to tell you actually about the trend is that when you have such a bearish trend that's trying to create lower lows and lower highs, your main criteria shouldn't be this liquidity grab here. If you look at the closer picture, you'll see that we have a downtrend. So started creating lower lows and lower highs, and then after that, this candle is not the only confirmation to get into a buy position. It's not actually like that, because there's so many other aspects. The trend is the most important thing, and after that it comes down to the confirmation of the candle at a specific zone, not everywhere. So this is exactly what happened, guys, and I was just watching the market because there was nothing to do. There was no high probability supply in demand zone. There was actually one right here. This can you see, this is the last bullish candle, the green candle here. So if I cover the entire candle all the way to here, you can see the gap. So this is a high probability supply zone, and then nothing happened after that because in this case I wait for the price to tap into this level, and if it gives me a good confirmation, I take that. So another one right here, two bullish candles back to back. They formed back to back, which is really cool because look at this. There's a huge gap again from this candle and this zone right here. So this gap makes this zone a high probability supply zone. So it just kept dropping, guys. As you can see, this is not a high probability supply zone and nothing actually formed, but this is a quick one that formed this high probability demand zone, and then it filled in the gap super quickly. So you can get into the trade, but it's wrong. The reason is that the trend, look at the trend, guys, look at the trend. You're not gonna buy right here unless you have a really good buy confirmation and a good structure, which is higher highs and higher lows, but you don't have any of that. So, but let's say that I want to take my buy position here and I want to close it exactly before the next high probability supply zone. So this is exactly 1-to-1, my buy stop here, my stop loss here. Let's see what happens. Boom. Got it stopped out in less than a second. That's what I'm saying. Trend is very, very important. It also makes this one invalid. Plus, we don't have any high probability supply zone around this area except this and this. Okay, let's see what happens, guys. This is very, very cool. No high probability demand zone here. But if you want to use Fibonacci, you can also use this. You can actually start from where the move is started all the way to where it ended, and it start doing correction, I would say. So this is a golden zone between 50% to 60%. So if I cover the entire thing, you can see this. Let's see how it's going to react. Yes, see, if I wanted to trade based on Fibonacci and I put my buy position, my buy stop here, my stop loss below the zone, and my TP all the way to the first high probability supply zone, let's see what happens. Boom. This would be a beautiful trade if I wanted to trade based on Fibonacci. But I stick to my rules, guys. I stick to my rules. I stick to the trend. That's why I don't take this trade. I'm not saying it's not profitable, but you know, guys, stick to your plan. If your plan is to take Fibonacci levels, then go ahead and do it. But if you're only trading based on high probability supply and demand zones, then just do that. It's way better to stick to one thing instead of like having multiple strategies. But it's easy to use Fibonacci, guys. And you know that right here, most of the things are changing because of 3 massively bullish candles back to back of each other and a multiple breakout structures towards upside. And these bullish candles are strong. It's not like these corrections that, you know, the market drops a little bit of correction and then drops again a little bit of correction. No, we actually have 3 big candles that are trying to go up, and we have a multiple breakout structures, small breakout structures. So, and if you want to use Fibonacci, just a quick note, you need to start it from where the move is started, which is the bottom of this candle, all the way to where the correction started. Where? All the way to this candle here. Because right here, this is the last bullish candle, and after that the correction is started from here, boom, dropped. This is the zone. This is our golden zone between 50% to 60%, this yellow one. And if you're using TradingView, this is not going to be something that you see because it's customized. And I specified this zone, and then I have my candle here. I can put my buy stop here, my stop loss here, and then boom. It could be a beautiful, almost 1-to-3 risk reward ratio trade. So what I did was this. When I noticed that we have a high probability supply zone here and we have a massive bearish engulfing candle, I love these confirmations. The first confirmation, high probability supply zone, trend is bearish, bearish engulfing candle. 3 confirmations, and then you jump into the trade. You can put your sell stop below the previous candle, which is this one, or you just wait for the second one and then you put your buy sell stop here, or just sell it right away from here, and you put your stop loss above the zone or above the candle, and you can take your 1-to-1 or whatever. If you can also leave it under. Look at this, guys, how beautiful it is. And if I want to take it all the way to the next high probability demand zone, which is this one, I can still do that, but I better have multiple open positions rather than having one, and kind of try to stretch it all the way to this area here, because my goal is to get to 1-to-1 all the time. And if I want to kind of widen my TP or have multiple open positions, I take my 1-to-1 first, and then I move the stop loss to break even for the rest of them, so I can, you know, make better profits. But in this case, let's see how far it's going down. Okay, let's see if it doesn't tap into this level. See, if I want to take it all the way to here, it'd probably be 2.74. This is 1-to-3, and it probably never taps, and I can, you know, get it stopped out here. That's why I don't do it. And if I do it, I take my 1-to-1 here, and then for my next position, which is going to be here, the stop loss is already moved to break even, so it's risk free. I don't risk anything. I just take my 1-to-1 and get out of the market, and that's what I do. And plus, you can also use Fibonacci here. This is where it started, this is where it ended. Let me, 0 is here. This is Fibonacci. Let's see. Okay, a lot of people actually get trapped. because when you have this bullish engulfing candle, a lot of people think, oh, that's great, this one is not valid anymore, we have a break of a structure, correction, and then continuation towards upside, and it's not. If you take your trade here and put your stop loss here, first of all, there's a high chance that you get stopped out, because if you put your stop loss below the zone, you get stopped out. Well, let's say you don't, but you can't even take a one-to-one trade. One-to-one is here, you get stopped out anyways. So I'm not saying Fibonacci is 100% all the time, but if you are having a high probability demand zone or high probability supply zone, then there's a good chance that the price wants to reach those levels rather than your Fibonacci level. But the reason that it worked here, because before that we didn't have any high probability demand zone, you know what I'm saying? But right here the Fibonacci didn't work because there's a high probability demand zone here. So I mean, there's more chance that the price wants to reach this level and kind of respect it. And that's why when you see a high probability demand zone, then I prefer not to use Fibonacci anymore and just let it, you know, tap into this zone. Or if anything else happens, who cares? I wait for better opportunities and then I take that particular setup. So right now this is our goal, like this is our next high probability supply zone is our target, I would say. And also I want to see what happens after that. So look at this. I'm not sure whether it actually tapped, but I don't think so. It didn't really tap, but let's see how far it's gonna go. Okay, so this is the first candle that literally tapped into the zone. So if I take this one, if I be super smart and put my sell stop here, of course I can take my one-to-one super fast. Look at this. I can literally bring down my stop loss all the way down here, and then this one is one-to-one. It's done. But let's say I don't, and I want to get this big candle here. So I put my sell stop here, and my stop loss is gonna be right here, and my one-to-one is going to be here. I can still get it. See? If I actually put my sell stop here, super close to this candle, and my stop loss above the previous candle, then I can take my one-to-one. But let's see how far it's gonna go. So right now it's sitting at this area here. This is what it's sitting at. So I can take my one-to-one. There's no problem with that. But the market is closed, obviously. But if you wanted to take it, it's kind of late, out of my trading hours, but you could do that. So that's it. I think that was the only trade that I took, guys. I hope that you got some value from this video, because this is one of the best strategy you can ever imagine. Go back this to yourself and then come back to me and tell me your opinion. Like, let me know how it went for you. Drop your comments here if you have a question regarding Gold EA Incubator or even this strategy. I'll get back to you as soon as possible. So I hope you have a profitable week, and again, see you on the other side.